Hello, and thank you for watching this quarterly update on MIGO Opportunities Trust. This is our first quarterly newsletter under the new reporting format, reflecting MIGO's shift to a more concentrated, engaged portfolio of 10 to 15 core holdings from around 40 previously. The fourth quarter was strong, with NAV up 3.9%, outpacing the MSCI AC World Index at 3.4% and the Newman Small Companies Index at 2.9%. The share price rose 5.3% as the discount narrowed to 3.2%. Monthly NAV returns were plus 2.8% in October, minus 0.8% in November, and plus 1.9% in December. Contributors spanned long-standing and recent positions. Georgia Capital, held since 2019, added 1.2% to NAV with shares up 29%, driven by a 15% NAV rise and tighter discount from 37% to 30%. As a refresher, Georgia Cap holds stakes in Line Finance, formerly Bank of Georgia, and a diverse set of private holdings covering the education, insurance, and renewable sectors, amongst others. The attractively valued and high-growth portfolio is complemented by best-in-class capital allocation, with no new investments made while the discount remains wide, and proceeds from divestments used to fund share buybacks. Grisham House Energy Storage, added in 2025, also contributed 1.2% by a rising NAV and narrowing discount. As the UK's largest battery storage owner, with over 1 gigawatt of operational and a large pipeline, Grid secured more tolling agreements for revenue floors, enabling refinancing for capex on both augmentation and new capacity. Its 3-year plan should yield material free cash flow for buybacks or dividends. It trades at a 30% discount to a NAV set to grow significantly in 18 months, backed by sector transactions. Baker Steel Resources added 0.9%, buoyed by strong listed holdings and better junior mining finance. GCP Asset-Backed Income contributed 0.7% amid its orderly wind-down, redeeming 20% of shares at NAV in December after 60% total redemptions. Our private equity duo, HarbourVest Global Private Equity and Pantheon International, both 2025 adds, benefited from discount narrowing, with HarbourVest selling $300 million, that's 7% of NAV, of fund positions at a tight 6% discount to fund debt repayments and buybacks. Detractors were mainly in renewables in runoff. US Solar Fund detracted 0.5%, Aquila European Renewables, Eco US Renewables, and Bluefield Solar all detracted 0.4%. We added to Aquila and Ecofin at attractive levels despite generation shortfalls and tough sales market. Bluefield Solar, a new October edition post a failed internalisation that tanked the shares, saw the deal scrapped and a sales proceed launched, including the manager's business, which could attract more business bidders. Top 10 concentration now stands at 64% of NAV, up from 42% a year ago, enhancing our engagement influence. MIGO targets undervalued closed-end funds with catalysts, aiming to outperform SONIA +2 long-term, and this higher conviction approach positions as well. We look forward to updating you again in April.